Good afternoon, good morning, depending on the time zone and country that you might be tuning in from today. Welcome back to another session here at Fintech Nexus. I'm your host and moderator today, Todd Anderson, Chief Content Officer at Fintech Nexus. Before we get started, just a couple of quick announcements, for our session today. First, want to do a special thanks to Chris and the team at Proliferation. You've been longtime supporters of various events that we've hosted, both digital and in person. We appreciate the support and thank you again for your continued partnership. I also want to do a special thanks to Chris, Tim, and Nick for their time. Speakers, obviously, we do prep for these and we take time, to craft these sessions. So we appreciate your time. And as always, to the audience, obviously without a viewing audience, we can't do sessions like this, whether you're listening live and want to interact with the session, or if you are listening to us on video. So thank you. And one other reminder to our audience, coming up in just a few short weeks, we have our annual Fintech Nexus USA event. This week is Price Break Week, so tickets will go up at the end of the week. We have great keynote speakers, lots more announcements coming. There's still room to attend, speak, or sponsor. So please reach out, check out fintechnexus.com for all the details. And to the audience, before we get started here, I want to just remind you that we encourage your participation. So at any time, if you have a question, please input that question through the Q&A box. We highlight the Q&A box because if you want to a phone number, or if you have a general question about troubleshooting, please use the chat function. For the Q&A, we want to focus those questions to our group and our topic today, which is the next evolution of consumer lending. And that's enough for me for the time being. I'm going to pass it around the room, our virtual room, to our panelists to get some introductions going. So Chris, I will start with you. If you could tell the audience a little bit about yourself and a little bit about Proliferation.
Hey, Todd. Nice to see you again. Yeah, my name's Chris Neen. I'm the General Manager for Prolifere's business here in the UK and I. Been with the business about 7 years, but been around the industry for a lot longer than that, but great to be here today. Proliferation is a financial technology business. We were established back in 2004, and ostensibly, we help our customers make AI-powered risk decisions across the customer lifecycle. So credit, fraud, and identity, as you're onboarding through to managing that customer during their relationship with you. So I think really interesting topics today, and looking forward to discussing those with Tim and Nick. Thank you.
Great. Thank you. Tim.
Great. So I'm Tim. I'm Chief Commercial Officer at Zopa Bank, where I sort of primarily head up our lending strategy. So Zopa is a digital bank established in 2020. Since kind of launching, we've attracted 3 billion in deposits, more than 2 billion of loans on our balance sheet, and we've issued about 400,000 credit cards. And we've been voted UK's Bank of the Year 2022 at the Altfire Awards, and previously Best Loan Provider and Credit Card Provider at the British Bank Awards.
All right. Thank you, Tim. And Nicholas.
Yeah, nice to meet you all. I am the CEO and co-founder of Fluro. Fluro is one of the UK's leading providers of embedded lending. We power our corporate partners to offer loans with game-changing customer experience to their customers. We launched in 2014, so I've been trading for almost a decade. And we expect to grow to become a £1 billion a year lending business over the next few years. We focus very, squarely on the customer and making sure customer experience is the absolute central point of everything we think about. Which means that very often we're trying to find ways to make customers' lives easier, to serve customers better, and really where the incumbent providers often have many challenges solving their problems for their customers, try and solve those problems for them, often using technology and data science, and in particular focusing on some of the things we're going to be talking about today.
Thanks, Nick. And as always, a reminder to the audience, for anyone that might have just jumped in the last couple of minutes, we encourage your questions. So please ask them at any point through our conversation, and we'll pose those to the panel. I wanted to kick off just with a higher level question to kind of set the stage, and from there we'll kind of get a bit more detailed. But Tim, I'll go with you first. Where is consumer lending as we sit here today? We're obviously hearing of a more challenging environment. There's been, from the onset of the initial P2P lending back in the old days, to where we are today with buy now, pay later, point of sale finance. Where would you say we sit today in terms of consumer lending in the first half of 2023?
Yeah, I'll tell you a bit about what we're seeing and maybe what we think will come in the future. I think as you called out, we are in a fairly challenging kind of period at the moment. We think kind of we're probably at sort of the peak of the credit cycle, or near the peak, in terms of sort of consumers' ability to repay. There's consumers are facing a lot of pressure from rising cost of living. More recently, sort of rising interest rates has driven a lot of sort of impact to kind of both mortgage costs, but also rental costs, and that's having a real impact on consumers' ability to borrow. So far, the labour market has been quite resilient and unemployment rates remain very low, but that's something that we're sort of keeping an eye on. On the demand side, actually, what we're seeing is that sort of at the aggregate level, demand for loans and car financing, which are two of our products, are actually down maybe 15% year on year. What we're seeing is that consumers are sort of tightening their belts and being a lot more prudent with sort of how they borrow as a result of the situation they're in. But actually, so when you speak to consumers about their reasons for borrowing, actually more and more so, consumers are actually borrowing to kind of cover the more basic cost of living. And I think that ONS actually recently published that there'd been a 17% increase in people borrowing via loans and credit cards due to increased cost of living. What we're seeing in the card market is the sort of spend behavior is kind of shifting back kind of from services to goods as consumers have come out of COVID, and we're beginning to see more sort of everyday spend on their cards, probably reflecting the pressures that consumers are under. And then sort of as more of a market theme, what we're observing is a really kind of hard shift towards digital. So consumers have higher and higher expectations of financial services products, and increasingly they expect to be able to sort of get a decision in seconds, to know what rate they're going to get up front, and these are becoming really kind of key purchasing criteria alongside the sort of borrowing experience that lenders can offer. So we're currently very focused on sort of responsible lending, ensuring that we do adequate affordability assessments that reflect the environment that we're in, and continue to evolve our product proposition so they continue to meet the changing needs of consumers.
Chris, I'd love to get your thoughts on kind of where we sit today. I mean, you guys work with lots of different lenders of all different stripes. From your perspective, kind of where do you think we are today?
Yeah, I think Tim has described a lot of the challenges that lenders are seeing in the marketplace, but I think it's also we're still a really exciting and dynamic place to be. Certainly from a technology perspective, despite the challenges and the current headwinds around economies, London and the UK generally still remains a leader in fintech investment that is driving that innovation. So I think we can still be really proud of what businesses like Tim and Nick are doing. And Provenir plays a little bit of a part in that, on how our how our technology helps. But ultimately, again, to one of Tim's points, it's about making sure that you set your business up to be dynamic. So when there are changes in the marketplace, whether they be regulatory, economic, competitive, that you have developed your business to be able to flex and adapt to those market changes. And that just doesn't go for the new kids on the block. The established lenders are catching up. So it is ever that arms race around who's got the most the slickest customer experience, that minimizes friction in the customer journey. They're the organizations that are going to succeed in this ever increasing digital world that we're operating in. So, we've seen, you mentioned peer-to-peer, Todd, BNPL, has made huge strides. I know there's some regulatory changes or regulatory impact happening across that sector of the business, but that is only good, from a consumer perspective. And now, organizations like Nexus are embedding their solutions into the customer journey that are, and they are, again, great examples of innovation where we're designing products around a customer need. And, that can only be really good for the customer, but also good for the merchants that are utilizing things like embedded finance. I would counter that, though, again, with the new consumer duty that's recently come out, and that does set these higher and much clearer standards around how regulated lenders should protect those customers across sort of financial services and really put the customer's needs first. So it's that balance around how do you increase the access to credit, how do you minimize the friction in the customer journey, but then counterbalance that around affordability, and then also being able to identify quickly and early those customers that may be vulnerable. So real challenging times, but at the same time exciting.
Yeah, thanks, Chris. And I echo a lot of what's been said already. Clearly, we are in, or will be soon going into, very challenging times. We're exercising a strong degree of caution going into what comes next. There still is a lot of uncertainty. I think the data points are sort of coming through. So how the economy unfolds is probably now more certain than it was. Although obviously the macroeconomic position has weakened significantly from sort of 12 months ago. But I think also there's a big focus on where the impact of the economy is going to come through in terms of customer segments. And so, our view is that it's highly likely that the lower income households are going to struggle more, for sort of fairly obvious reasons. And that can sometimes be connected to, the credit scores and credit bands for those customers as well. So we're trying to exercise caution in those ways. But also to look at it from the other perspective, we have seen an ongoing trend over the last really sort of 5 years or more of a shift from the sort of established providers to the income to the challenger providers, Zopa and Floro included. And we've seen a steady increase in the market penetration of the challenger brands, and I think we're probably now at north of 40% of the market, which is steadily ticking up every single year. And so I'm heavily focused on how we grow our market share and how the challengers grow their market share altogether, as opposed to necessarily focus on any individual providers. And I think if you sort of look beyond that, I think it's very much driven by the types of customer experience that we generate. And Chris, I think you're right. The incumbents can obviously improve their customer experience as well. And I imagine, you work with some of them in doing that. But actually, the speed that we run at these things, the energy that we put into these things in maximizing customer experience, I would hope is sort of quite hard to keep up with, because we're constantly looking for the next angle of how we can make that customer's life better and easier. And there's lots of interesting stuff that we find, literally sort of week on week.
Yeah, I think one area to dig in a little bit, you've all touched on it during this opening. Part of the webinar is that data clearly underpins most of what you're doing, and the amount of data sources has certainly increased significantly from when fintech lending, I guess you can say, initially started, but also the real-time nature of that data as well. And so Chris, I'd love to get your thoughts on kind of the way you view data and those that you work with view data and how that's evolved. And Tim, I'd love to get your response as well, as you guys use, I'm sure, a lot of these data sets when looking at borrowers and how to underwrite them and ultimately serve them. You're on mute. There you go.
Thanks, Todd. Yeah, so I think, like you say, data, is the fuel for all these decisions that our customers are looking to make. I think if you think about, some of the things that Tim and Nick have touched upon, it's about how do you be quicker, how do you be smarter in making real-time decisions to deliver that, that customer experience that and they're powered by data ultimately. So whether you're asking the customer the question or going to internal systems or external sources of information to sort of enrich your understanding is, that's just BAU today. I think where there's been lots of innovation is untapping the value within the plethora of data that exists out there. So whether that's structured or unstructured data. So, the ability to ingest any information source, test it, identify value, and then be able to operationalize those insights to help you make those quicker and smarter decisions is where, organizations are going to be able to make a real difference. And that's not just about, an individual firm sort of grabbing market share because they're quicker and smarter. It's also enabling, greater access to products and services as well, which is super important. So no one wants to make a bad loan. No one wants to have to try and collect a loan. Everyone wants to make sure that they are offering the appropriate product at an affordable level, to the customers that they're dealing with. So, data is super important in that. But unless you've got the ability then to untap the insight from that data that's providing the information, the data means nothing. So the ability to, analyze that information, utilizing, artificial intelligence, machine learning, and then be able to use that to make those smarter decisions is super important. And the reason that, organizations, were really successful in that BNPL space, in replacing credit cards, is that they were able to utilize data to an underserved element of the population that wanted access to goods and services, but wanted a little bit of time to pay for them without going through a very rigorous sort of credit and affordability assessment. What's happened though is that the industry has grown to such an exponential extent. There's been some poor customer experience out the back of that, so the regulators had to respond. So it's like I said earlier, it's a moving feast, and so unlocking that data to make sure that you're making those appropriate offers that are affordable is super important. And just, I could say, leveraging that data, leveraging data science and AI to make sure you're making the most appropriate decision.
And Chris, to give a slightly different perspective, I do agree, we're very lucky in the UK to be in such a rich data environment. But some of the things that I come across, really commonly still frustrate me, significantly, such as the credit bureaus, ultimately are not really giving any real-time data or rarely, real-time data. There's always a lag in lenders sending in their keys files, etc. So some of the stuff that we're trying to champion is getting, if we can, get a taxi via an app that arrives on our doorstep within 3 minutes, then surely we can get our data to the bureaus at the very least daily, if not in real time. And so therefore, enhancing the data environment. So yeah, we are lucky in the UK to be in a rich data environment, but I think there's a long way to go in terms of where we can get that to a much higher degree of sort of real-time processing, which can then, enable us to manage risk more clearly.
Yeah, I think just to build on that, I think the innovations that we've seen so far, particularly in a kind of lending decision context, is really how you use that data and the application of machine learning increasingly over sort of simpler linear models, as well as sort of decisioning in real time and kind of giving guaranteed rates, almost becoming a hygiene factor. But actually, there's a lot more that we can do with data, as Nick said. I don't think we've really discussed open banking data yet, but we're certainly seeing that there's quite a lot of power in that data. And as consumers become increasingly understanding of open banking and willing to share that data, I think that's only going to sort of drive sort of more revolution in the way that lending decisions make. And then I think after the point of the first lending decision, actually, there's been quite limited innovation in terms of how we use data to serve customers better, to be more effective in developing collection strategies. And that's probably an area sort of ripe for investment over the next few years.
And Tim, how have you seen the adoption of open banking across your customer base?
Yeah, so we're quite similar to Nick in the sense that we're really an embedded finance company. Most of our customers are acquired through partnerships with other firms. And so actually what we're seeing now, we process about 5 million credit applications every month. And about a third of those customers are actually providing open banking data alongside their application. And that's because they work with platforms like ClearScore, where there's kind of a clear incentive and value exchange for customers to provide that data. And then we can use that to inform the decisions that we're making so that ultimately, lending is more affordable, more resilient. And so that's really beginning to snowball as time goes by. Just more and more customers are providing that data.
Yeah, and that's the other side of the sort of challenge in terms of encouraging our partners to be able to give us more rich data that I was actually going to touch on, Tim. Often, with the partnership-based approach that we operate, it's the partner that has the contact with the customer. And so therefore the partner requiring consent for open banking is a critical sort of step. So the more that we can do collectively to encourage the online intermediaries and other firms out there doing this sort of stuff to get open banking data at source, then the more powerful that can be for us all.
As a reminder to the audience, if you have questions, please input them in the Q&A box, and we'll go ahead and pose those questions to our panelists as we move through the conversation. Both Tim and Nick, you've mentioned the term embedded finance. Obviously, that's risen quite amount in the last few years. It's become a pretty popular term across fintech. Has the onset of embedded finance started to change how consumers view lending, in that they can get it through almost anyone if they're with a non-financial brand, a financial brand? Does that change the relationship that a lender has with a customer, and how is embedded finance kind of evolving the lending system kind of where we are today?
Yeah, from our perspective, it really, we all try to start with all thought processes around the customer. And in our experience, we partnered with lots of different styles of firms over the years. And what we've found is where partnerships are focused on, firms that serve customers in a similar fashion to the way we're serving them. So, for example, insurance companies, neobanks, there's a greater penetration for embedded finance, whereas we've worked with media companies, for example. At one point, we had a partnership with one of the largest newspapers in the UK, and ultimately wasn't very successful on the back of the fact that customers weren't really expecting to get credit from that sort of organization. And so we've learned over the years that firstly, the type of partner you work with is really, really important. And also the type of data that they have available. As I keep on saying, we're trying to serve the customers better. And so therefore, whatever we can do to working in partnership with that corporate partner to say, are there data points that they see that can help us serve the customers better, make better credit decisions, put the products in front of the customer at the right time for that customer. Is the customer likely to be buying a new car, or are they likely to be moving house and having home improvements, for example? And so therefore making sure the customers are given the product at the right time, rather than necessarily just blanket advertising to customers all at the same time. So yeah, what we're seeing is that's becoming very successful. We ultimately have an aspiration to get sort of market coverage across every adult in the UK via our partnerships, and work with our partners to try and get the penetration within their customer base as far as it can be.
Yeah, I think to build on that, I think embedded lending is probably still quite nascent in the UK. But if you think about finance in a broader context, take something like payments. 20 years ago, if you were buying something online, you'd find a product on a website, but then you'd probably have to call or send a check to pay for it. But now we think we think nothing of the fact that payment is just seamlessly embedded in that kind of process of buying goods. And so we do think that sort of over the next few years, that increasingly lending is going to be embedded at the point consumers need it. And so clearly, BNPL firms have kind of really been at the forefront here, and within one of their target customer segments and the merchants that they work with, they've created great experiences for both the merchants and end consumers. Obviously, there's some kind of challenges in the way that they're doing it, but I think we certainly see sort of point of sale kind of finance is one of the key parts of our embedded finance strategy, and we recently acquired a point of sale lender. And sort of over the next 6 to 12 months, we're really excited about almost kind of launching BNPL 2.0, which sort of takes the good bits of the existing proposition, but then sort of brings the sort of aspects that we as a regulated lender are really expert in, and which will kind of improve the outcomes that consumers get in that space.
We've been focused a lot on kind of the evolution of lending, kind of where it's gotten to today. Some of the highlights of using embedded lending and embedded finance. But I want to ask, and Chris, I'll start with you on this. What are some of the challenges that lenders are still facing today?
Yes.
And kind of is there a common theme? And I'd love for Nick and Tim to jump in after Chris gives a little thoughts.
Yeah, I think the UK is a very and has been for a long time a very credit driven economy, and that's we're not unique, but that's not necessarily the case in other parts of the world. And because we're being successful in the digitization of financial services, because we attract that investment, and we've got firms like Zopa and Floro who are really pushing that digital customer experience, and why they've been so successful. So I suppose the challenge is, how do you continue to differentiate? In a crowded market. Tim's talked about that share of wallet being is changing, and so how do you as a lender make sure that you are getting your share of that wallet if consumers are spending or needing access to finance for different reasons. But ultimately it's about remaining competitive, but also what we've seen in the last year or so is that whilst there's been a clamour for scale across fintechs, I think certainly the investment landscape has changed slightly, in that it's more about achieving profitability rather than that huge scale, which a lot of certainly some of the BNPL players were chasing. And the headwinds in the global economies have certainly driven a lot of that decision making. So, and at the same time, you've got to continue to delight the customer, remove friction, make better use of data. I think what Nick said around how do we get more real-time information, absolutely support that. So how do we stream data that's relevant to help us make those decisions is a challenge, and not rely on information that is out of date, really. So things like the expansion of open banking, but other data sources that give us a much closer insight to that consumer's circumstances today, not yesterday or last month or last year, are super important. And then factoring all of that into that cost of living crisis and the increased focus on customer vulnerability. So that profitability is probably is challenging for lenders as well, because you want to make these more informed decisions. You want to get smarter in how you make decisions, and accessing data to help you do that comes at a cost. So there's a real sort of trade-off between what makes us smarter and quicker versus what's profitable. So I think the challenges that we're seeing and the sort of questions that we're being asked by our customers are how can technology help us solve for those type of problems. But our approach has been for the last sort of 4 or 5 years to continue down that agile approach to how this technology is deployed and then managed, to making sure that our customers have lots of flexibility and scalability when they need it. So as headwinds come along or competitive threats or new opportunities represent themselves, that they have an ecosystem that enables them to really seize the day and take advantage of that. So I think it just goes back to that ability to test things, optimize, and then really operationalize those insights as quickly as possible. So I think I'm really interested to hear sort of Nick from a lender's perspective what Nick and Tim see as those challenges. But certainly that's from a Provenir perspective what we're seeing.
Yeah, I may have smirked slightly, Chris, when I sort of heard the question, because the range of challenges that we've faced in the last sort of 12 or even 36 months just sort of dwarf anything we really saw for the sort of 10 years before that, don't they? And there were times, obviously, in the autumn where the interest rate markets were moving more in a day than they had done in a year prior to that. So the range of challenges out there are just have been very extreme. I hope now that we have we're preparing for the worst, but I'm hoping for the best in terms of what's to come. I hope now that we get some stability, certainly, through government and interest rates, for example. I think the government's been very proactive in supporting the consumer. And so therefore, subsidies for energy bills, etc. Tim, I'm sure you were the same, but we updated our affordability model something like 7 times last year because of the incredibly frequent changes that were coming through in government policy and sort of other ways of thinking. So as I say, that what are the biggest challenges? Well, clearly adapting to the extremely rapidly changing market conditions has been definitely one of them. We're a capital markets funded business. We lend from our own balance sheet, and so therefore, we do probably, Tim, have to react faster than you, as a bank. But naturally, all of the banks are also facing significantly higher funding costs now. When we look at sort of a basket of savings rates in the market, it's probably 10 times higher than it was 12 months ago across the sort of whole of the market. Adapting to the range of sort of extreme changes quickly has definitely been one of the things we've been focused on for the last 6 months.
Yeah, I mean, I'd echo a lot of what's said. I think we're fortunate in the sense that as a bank, we have had a bit more stability from a sort of funding perspective, but sort of navigating through sort of regulatory change and actually sort of making sure that we deliver good outcomes for our customers is really our priority at the moment. And as Nick said, it almost feels like every time you turn on the TV, something's changed, and sort of you have to be able to react quickly to sort of changing circumstances to be able to do that successfully.
So we've started to get some audience questions. As a reminder, if you have some more questions, feel free to input them in the Q&A box in your Zoom window. First question, what sort of importance do you place on in-life customer authentication journeys and transformation of legacy processes such as KBA, which I believe is knowledge-based authentication, where they deliver a poor customer experience?
This is something we've been thinking about quite a lot recently. So I think it's really critical that firms provide really strong authentication experiences. And actually, particularly in an embedded finance context where you're embedding your product in someone else's experience, that challenge becomes even harder. So this is an area that needs sort of investment, particularly for more transactional products like credit cards, where customers are engaging on a very regular basis with your product, and you want to kind of minimize that friction. So kind of you can both deliver the customer experience benefits, but doing customer authentication well can also reduce some of your own risks, like fraud in particular. KBA is not a particularly good standard for authentication a lot of the time. Fraudsters can often obtain information and get through those checks, so we're always looking to uplift our authentication standards and deliver great experiences.
Any other thoughts on that one?
Yeah,
We had another.
nothing really to add on top of what Tim said.
Another one we came in, which is related to the previous question I asked the group, which is around challenges. What is the biggest challenge for lenders with regard to data access and use? And then specifically for Provenir, where do you see the challenge in working with data partners? So a couple of parts to that question.
Well, maybe if I let Tim and Nick answer the first part, and I'll pick up the second. Would that make sense?
Perfect.
Sure.
Yeah, I think so. Nick, do you want to go first?
Sorry, Tim. I was going to jump in. Yeah. So, what the biggest challenge is for data access and use? We are a big proponent of open banking data. I think we launched open banking data about a month after the legislation came into force, and so therefore I've been acquiring. I think was that in 2018. I think, but yeah, acquiring that data for the best part of 5 years, I imagine. And so trying to get our partners to acquire that data at source is a really big part of access to data, which we mentioned earlier. And then use of data, I think being a fintech, we're able to use data in really interesting ways. We explore, our system is built in a way that is microservices based, and so therefore we can build models in whatever technology and approach we need to. As Tim referenced earlier, we're very keen on exploring all sorts of techniques, including machine learning, to build the most predictive models. And so I think actually on the answer to that part of the question, we don't necessarily see challenges. It's more about just spending the time to invest in those processes.
I would echo what Nick said. The kind of technology and sort of risk management processes can often be challenges in larger banks, I think, but actually in the sort of fintech space, we've built strong capabilities in that space. So for us, kind of the challenge from an innovation perspective is really kind of getting hold of that data, having adequate consent, providing the right sort of reasons for customers to give that data to us.
Yeah, and I think just for where Provenir, the way Provenir approaches this is very much around simplifying the access to data and enabling you to use that data where you want to within a risk, fraud, or identity verification process. So we've invested a lot of our R&D dollars into developing a complementary ecosystem of data vendors, where if you want to deploy a data source within a Provenir decision, it is literally just a drag and drop of that data source, and the integration is already built and established and maintained by our marketplace product. And so yeah, you can if I go back even just 5 years, to integrate a new data source into an existing bit of technology was a project in itself. And that would take months, if not longer, depending on the size and the complexity of the bank or the lender. We've sort of stripped that back and enabled it within with the right credentials, to access that service from a business user's desktop. So That's very much around third-party data, so, traditional credit bureaus through to open banking and lots of other services around fraud and ID. They all exist. And we've been busy building those things over the last couple of years, and we continue to do so. I think where it is also been more challenging is, there's lots of data, like you said, Nick, from your partners, that you would like to incorporate into how you make more informed decisions. And microservices is a great servant to enabling you the ability to at least have access to that information. What you then need are smart tools to transform that data so it can then be used to deliver to help you deliver better decisions. And I think we think we've got a good answer to that as well. We've got developed a really smart way where you can sort of transform and normalize data within our technology. So you can use whether it's structured or unstructured data in making those informed decisions. So I think it's really interesting. In a challenge, but we think we've got a good answer. It's not complete, and we'll continue to invest in that area.
Thank you to the audience for some questions. If you want to input some more, feel free to enter them in the Q&A box. Moving through our conversation here, you've touched on it in various ways throughout, which is the use of the newer technologies, AI, machine learning. I mean, how much impact do those technologies have on your business, and what does it ultimately unlock that helps? Is it keeping up at the customer in terms of after you've maybe delivered the loan? Just quicker decisioning, kind of where are the key aspects that the technologies sit in your business, and how much has that made an impact? Maybe Tim, I'll go to you first on that one.
Sure. So we've been using ensemble machine learning models for kind of lending decisions for about 7 years now. And so we're kind of on our third generation models at this stage. I think the kind of principal benefit really is that they just are much more effective at rank ordering, and therefore can enable you to manage kind of accept rates and credit losses more effectively than sort of traditional linear models. And they've really allowed us to step away from sort of fairly kind of human-led underwriting strategies to sort of very automated strategies. We now make 99.5% of our decisions automatically and in real time. So we've seen huge benefits there. And sort of as we look forwards, I think it's really that the revolution is going to come in how we service customers. I'm sure everyone's aware of ChatGPT and the sort of almost kind of generational change in the kind of quality of models, kind of AI models, and I'm sure that that's going to start to sort of come into lending over the next few years and really transform the experience for customers and help lenders manage their costs as well.
Maybe if I just
Sure.
give Provenier's sort of view of the world from sort of machine learning, AI. So I think I can talk to some examples of the benefits that our customers have seen from it, but we're very much around that auto ML piece, which traditionally was a challenge from a regulatory perspective. How do you explain an automated machine learning model to a regulator, and how you made that decision at that point in time? But I think what we've been successful at is developing that explainable AI. And we're seeing increased adoption of certainly within that credit and pricing and affordability part of the decisioning journey. And from some of the clients we work with, they've seen real game-changing results from adopting this. And the tools that we've developed, they're not there to necessarily replace a data science team. I know there's been a lot of investment in data science across financial services. So our approach has been very much to, a bit like decision engines have freed up underwriters just to focus on the more challenging and problematic areas of a decision, where it needed some judgment, where a machine couldn't automatically say yes. And Tim, sounds like you've made fantastic strides. If you can automate, I think it was 99.5% of your decisions. That's absolutely amazing, and we do see a lot of that across the industry. But when you're looking to make those smarter decisions that make sure that you're more profitable, and you're making those decisions around a customer's affordability in a more efficient way, we've seen some real benefits. And we've had a recent experience where, by leveraging some of the tools that we've developed, we were able to enable a customer to achieve the same accept rate, but reduce their bad debt rate by several £million a year. So it can have an immediate impact. I think it's just having confidence in the underlying technology that is enabling you to develop these models in the first place, and then having full transparency in real time as to how those models are performing, and then in the longer term, how do you continue to optimize those models to make sure that firstly they're not drifting, but also identifying sort of new attributes that will help you be faster, smarter, and more profitable in the future as well.
So we've had a few more questions come in from our audience here. Nick, I'm going to ask the first one to you. How do you make customers confident to use open banking based onboarding where they are perhaps encountering such a method for the first time?
Yeah, really good question. I remember being sat in the office for the sort of government entity that was launching open banking a few years ago with Imran. And he said, in the very same seat that I was sat in, he'd had sort of senior leadership from British Gas and BT and, lots of other sort of massive utilities pondering how they're going to explore the use of open banking. And I think the first point is that I want to make that, when you see the large sort of incumbent providers across the whole of UK corporate world embracing open banking, then there will be inherently a customer education process that comes with that, and customers will become more comfortable with it. I think the second point is that it's about making it as easy as physically possible. I remember needing to do it, I think it was for eBay at one point, and it was literally sort of 2 pumps on the side button on my phone, face recognition on the app, and it pumps you straight back over to the eBay app, and it was done. And I was staggered, someone who sort of knows quite a lot about this technology. I was staggered how easy it was that they'd made it to use the open banking technology to authenticate me. And so, that for me is the sort of, the level of the challenge that I think, we should be trying to all aim for in making it as easy as possible. I appreciate that the effort there is not just on the lender side, but it's also the incumbent banks need to up their game. Some of the banks in particular are much better at it than others. And those banks that sort of, got a very low bar currently on user experience need to work on that. But yeah, as I say, the second point is really making it as easy as possible for customers. And then finally, the point that we think about is explaining the benefit. Ultimately, if there's 2 pumps on a iPhone and face recognition, and it's automatically then transacted versus sending in some PDF bank statements and sitting in a queue for an underwriter to get to it, it's just obvious which one of those is a more desirable outcome for the customer. So making sure we're just clear about the benefits of using it.
We're coming up on a few minutes left. Tim, did you have a point there? Looked like you were going to jump in on the open.
No, not on that one, no.
So we have a few other questions coming in here. Looks like for embedded finance, how do you see the evolution of partners in lending? What would make a partner more desirable to work with for lenders?
I guess, the number of existing customers they have and the level of communication they have with those customers. So is this an arm's length customer that they don't get to really communicate to very often? Or is this a customer they communicate to regularly and they have a lot of sort of data on the types of customers they are? And of course, clearly a customer with, a partner with 10 million customers is better than a partner with 1 million customers, for example. So the bigger the partner, the better in some ways.
I would also kind of align with the brand and that sort of thing as well. So yeah, the opportunity size is a big part of decision making, but also you want to ensure that they conduct themselves in appropriate ways, that maybe their brand ethos is consistent with your own, that sort of thing.
It's so funny you say that, Tim. I was going to say something really similar. The values overlap needs to be really strong. I think you've hit the nail on the head from a customer perspective, but also how you work together. We've had experiences in the past where ultimately the partner was just so slow to move that it became incredibly frustrating to ever get anything done. So having a philosophical overlap between the partners is also really important.
If the audience has any final questions, we're kind of coming up on our last few minutes together. So please go ahead and input them into the Q&A box, and we'll try to answer those as we look to wrap up here. I did want to make sure that before we go, we touched on fraud. Obviously, fraud is key to and anti-fraud and anti-money laundering is key to banking and financial services. And with the onset of fraudsters becoming smarter and smarter, how concerned are lenders and financial firms getting about fraud? And how much has the evolution of fraud fighting essentially helped combat some of what we've seen over the last few years? Chris, maybe I'll get you to start on that one.
Yeah, thanks, Todd. So I think from where Provenir is typically deployed, we help in that sort of credit onboarding and credit lifecycle management. But where we see the highest potential for fraud is that first interaction with the customer. Yeah. And so the challenge that Nick and Tim will probably be wrestling with is how do you ensure that there's enough level of adequate levels of fraud detection and prevention without producing huge volumes of false positives, interrupting and taken away from that customer experiences, which is how the sort of one of the key drivers around differentiation and being more attractive in the market to consumers. So again, I think the advent of more and more data sources that help you identify potential fraudsters, so you can interrupt that process where appropriate and take some action is super important. And there's lots of innovation happening in that sector. It's a constant battle. Fraudsters are super sophisticated, and I'm sure Nick and Tim have got some scars that they could talk about in that area far better than I could. But ultimately, it's along similar lines to the challenges that we've already talked about. Be smarter, be more predictive about an outcome, and making sure that you can explain why a decision was made. And that advances in AI and machine learning are certainly really helping combat those fraudsters as well. And I think part of the early adoption around machine learning was very much in that fraud space, and we expect that to continue. And I think where we're helping organizations is navigating away from policy-based approaches and using analytics and AI and that constant optimization, that learning algorithms to improve the speed and accuracy of those fraud decisions, just so you're really minimizing those false positives. So you're not creating work within your organization where it's not needed, and you're minimizing the impact on the customer.
Yeah, I think to build on that, we've seen actually through this kind of last 2 years, there's more and more vulnerable customers, and particularly those that are financially vulnerable are often much more susceptible to kind of certain types of scams. So the industry as a whole, I think, has seen quite a significant increase in crypto scams, particularly when, you know, people had quite a lot of FOMO a year ago because, you know, they wanted to sort of maybe realize the gains that they'd seen sort of in the press and on social media. And so we've had to kind of evolve to or adapt to a kind of changing landscape of fraud. And actually kind of alternate data is really powerful here. So, you know, being cognizant that maybe the kind of user that's applying for an application is using kind of a screen sharing tool or something like that is actually really powerful in sort of identifying that there's potentially fraud risk there. So being able to ingest that data quickly and use it in your decisioning can be really powerful.
Yeah, a lot of overlap, Tim. We think of it in two lenses. One is sort of backwards-looking data, you know, stuff that already exists for that customer, and getting that, you know, actually back to my point earlier about real-time data. If the bureaus were real-time, then we would know if Tim's made a loan to that customer an hour ago, and we could, you know, react to that, which I think is one aspect to it. But the other aspect is forwards-looking, so predicting which types of customer are more likely to be susceptible fraud, even though they haven't sort of committed fraud yet. And that's where we have a machine learning based model, in fact, which ultimately tries to predict the higher risk customers. And there's lots of you know, features that you know, customer segments that go into that analysis and enable us to try to refer only a small subset of customers, but take out the vast majority of the problem, rather than sort of having, as you say, Chris, incorrectly policy-based rules that sort of take out massive swathes of customers and causes friction for everyone.
We have just a couple of minutes left, so I wanted to wrap with, you know, where are we headed the next 12, 24 months, and kind of what are your thoughts for the somewhat near future in the space of consumer lending? Maybe Tim, I'll start with you, then Nick, and then Chris will wrap up.
Yeah, I think there's kind of lots of the themes that we've discussed today are going to play out over the next 12 months. I think the kind of innovation that we expect to see is that, you know, embedded finance and kind of point-of-sale finance are only going to grow. Even as regulation kicks in, we think that there's a huge opportunity in that space. The market's really untapped at this point. And I think there's probably going to be more blurring of the lines between different types of products. You know, customers want to sort of buy goods, or like they care about kind of a particular outcome, but necessarily the kind of product that they're taking isn't kind of forefront of their mind. And I think we're going to see a lot of innovation in product to kind of better meet the kind of needs of end consumers.
Yeah, I think it's my view is probably somewhat obvious in terms of, we think that, you know, embedded lending and embedded finance is going to continue to grow. We have based our, you know, our entire business model on that approach, and think that, you know, serving customers, you know, continuing to focus on the actual customer experience within that is very, very important, but also growing, you know, the number of partners that we work with.
Yeah, I think from sort of my perspective, it's you know, I think the continuous sort of strive for innovation. I think we are very good engineers here in the UK, both from a financial sort of service perspective, but, you know, as a nation, you know, we are good at inventing and scaling things. So, you know, we expect to see that to continue. You know, we welcome the next sort of the next disruptive approach in financial services, and we'll monitor the market for those. We tend to have lots of discussions with startups around, you know, how they're looking to, you know, deploy and scale new products that are different and innovative. So we get a little bit of insight at the same time, probably around when they're talking to investors, because they're really keen to, I suppose, get our view on how we've helped similar organizations to them scale in the past. So yeah, I think, you know, the future is that there's challenges ahead. You know, we're hopefully at the bottom of the current sort of economic downturn. but I think we're going to come out of it slowly, maybe not as slowly as we initially thought. But yeah, there's still some economic headwinds. So more challenges for organizations like Tim's and Nick's around making sure that, we're continuing to provide affordable and products and helping those customers when they hit some vulnerability. Keeping the fraudsters at bay as much as possible, and using data, technology, and AI to make sure that we're minimizing the impact. So yeah, that's it from
I
me.
think that's a good place to wrap there. Thank you to Chris, to Nick, and Tim. Thank you to our audience, as always, for your questions and your attention. And special thanks to the team at Proveneer for your continued support. Thank you, everyone. Enjoy the rest of your day.
Thank you, Todd. Thanks, everyone.
Thank you.